Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Matthew Montgomery with Maevlo. And I forgot to ask you before we started recording, like, what do you want your title to be, or what is it there?
Yeah, I'm founder, managing director of Maevlo. It's a small acronym. I pulled together the first two letters of each of my wife and I's three kids. I was headed down this path to name the entity something different, and had all these issues with registration and at the state and all this. And so, but yeah, Maevlo is our vehicle, and we've been in business since 2018.
And I didn't want to freak out my audience too much by wearing boots today. I do own one pair of boots. They were gifted to me by Steven Slaughter.
Okay.
For a birthday. What a great gift.
Where from?
Somewhere in Fort Worth.
Yeah. Okay.
Yeah. I'm not a boot expert.
Yeah.
But people might be surprised to hear that we both have a background in land. And so, like, what is a landman? Short for land manager, I think. Right?
Sure. Yeah. No, and since the TV show has come on with Billy Bob Thornton, look, Tim, if I had $1 for every time someone asks, like, is that what you do? You know, we'd probably be on an island somewhere having a cocktail. But yeah, landman is, and a landman is really, as I view it, someone that's kind of at the tip of the spear from in representation of an oil and gas company. They're really at the very front of the business development side. They juggle lots of different facets, from regulatory, legal, finance, and really oftentimes can serve as the face for an oil and gas company. More often than not, landmen are non-technical. So my background, I do not have a background in geology or petrophysics or engineering. That is not my background. But yeah, landmen come in kind of all walks and have different backgrounds. Mine is in finance. That was my degree, however many years ago that was. But yeah, I've been in the business since 2003, and started in Fort Worth with the Barnett Shale. Was really fortunate and worked with some really interesting entrepreneurs at the time. Larry Dale was the first boss I ever had, and started at his shop in the Barnett. But Larry Dale, Bruce Hill, Roger Beemans, Tom Tyree, the list continues to grow. But that was the earliest part of my career and shaped my career. And really, the common denominator amongst all those guys is that they were energy investors and really company builders. And that was always so fascinating to me. I wasn't really sure as I started my career whether I wanted to go into law, go back to law school, go back to graduate school. But being a landman kind of scratched both of those itches at the same time. And, you know, in any given day, you were working on understanding budgets and you know, economics of particular wells that we were drilling, or projects or prospects that we were building. And then, you know, you'd put a different hat on in the next week, and you'd have to go to the Railroad Commission or the state regulatory body to get a permit. So you had to deal with a little bit of local political aspects. A lot of it was just education of what was happening in that time frame, really kind of 2003, 4, 5, where the industry brought horizontal drilling and fracking really to the forefront at that time. So it was a amazing time to start a career, and was fortunate enough to be right place, right time.
I was going to ask, how did you get into it? So you did your undergrad in finance, and then were you like, you know, maybe some land guys like myself, for example, we just kind of got up in the morning, tripped and fell into it, right? It was like the most bizarre of circumstances.
Yeah.
Right?
So
like, it was not on purpose.
Yeah. It very similar story, Tim. I was finishing my degree. This was 2003, 4. So spring of 2003.
Okay.
And there was a light recession, you know, pre-GFC, everything felt a little bit different, obviously. A lot of my friends were finishing school and were either at a job that they really hated, but had a job, or frankly, were unemployed because they didn't get a job. So I started to interview my last semester of school. And there was a website called monster.com, which I don't even know if that still exists anymore.
I remember it. Yeah.
Where you basically upload your degree and you upload your pretty weak resume because you're a student. And it tries to match. It's matchmaker, more or less. Mm-hmm. And it matched me with an operating company called Dale Operating out of Dallas.
Okay.
And I drove over and sat down with Ann Vandenberg and Larry Dale, and really had no real background whatsoever in oil and gas, but was intrigued by the pace and the energy, and no pun intended, and the energy of the room, of what they were doing and what they were building. And
can you describe what the room's like? Like, are there like maps all over the place, or like, was it like a Wall Street office, or?
No, not a Wall Street office. But yes, maps everywhere. I mean, a landman's always going to start with a good map, right? He's going to start with a decent map that tells a story. And if you're a good landman, you can take complex issues and fast-moving environments and price change and all the volatilities that are associated with energy and oil and gas, and distill that down into a good story so that your maybe your partners, your stockholders, the community, the landowner that you're negotiating with. So you've got lots of different audiences. But yeah, so the room is in Larry's office in Dallas, still there today. It was a fascinating time because at this point in time in the shale revolution, it was the Barnett Shale, and the Barnett is the kind of most historic, I think is the way I would frame it, because that's where the shale revolution really started. You had activity that was up in Denton County, so north of Fort Worth. And then you had a lot of activity that was developing south of Fort Worth. So you had really Devon Energy at the time in Denton. And then you had EOG, which was a spinoff of Enron Oil and Gas. And they were developing assets and drilling wells south of Fort Worth. And so Larry was and his partners really looked at that and said, we're going to play kind of geology by closology, meaning we're going to play in between these two basins. If the basin's in the north and it's in the south, logic would tell you it's in between. Mm-hmm. And Larry's approach to it was, we can drill down subsurface and drill horizontally and develop the shale that's underneath an urban environment. And so we started with acquiring literally 3 to 5 acre drill site locations in the floodplains of the Trinity River. And because we didn't want to put drill site locations right in the middle of a neighborhood, but they were in the floodplain where houses were never going to be built. And we could drill or build our pad site there, drill down and out underneath neighborhoods and urban environments. And that's really where you saw the pace of the shale revolution take off from a everyday person standpoint. It wasn't this as you would kind of think, or maybe even on the Landman show with Billy Bob Thornton, where you have to have a ranch or you have to have 1,000 acres to be in the oil business.
Yeah, the King Ranch in South Texas.
Right.
So it doesn't have to be that.
Doesn't have to be that. It changed. We had countless conversations with landowners with half of an acre, right? And so we were talking to churches and grocery stores and city parks.
When you say urban environment, was it basically like downtown Fort Worth and then like the neighborhoods kind of out from there?
No, that's exactly right.
Okay.
Yeah, we city of Arlington. Okay. We drilled some wells directly underneath Arlington Lake, which was a really neat project. We shot seismic actually with boats across the lake and got to see 3D seismics. We could understand exactly where we wanted to land our well. So it was a really interesting time.
Can you explain what seismic is? Like, I've been on a 2D seismic project where you just have to get somebody to sign that you can run a thumper truck down the road. Right. But then there's 3D. Mm-hmm. That's about all I know.
Yeah. So the very basic outlay of it is you're going to lay down geophones, and you really lay those geophones down in kind of a waffle format. So think kind of like Chick-fil-A French fry, right? Okay. North and south and east and west.
Okay.
Right. Build a grid across the prospect area that you want to shoot your seismic across.
Okay.
And then you usually run a thumper truck which a lot of people, that kind of scares people, but it's really about the size of a truck that would clean the streets here in New York City. Mm-hmm. And it's sending vibrations down, and due to the different rock layers and shale layers, they have different porosity and different permeability. And so that vibration that truck sends down reverberates back to those geophones at different speeds because of the density and porosity and permeability of each layer that it's bouncing those sound waves off of.
Okay.
And so because you've got a solid network, right, or a layer of your geophones, it begins to build a map of what depths and thicknesses different subsurface rock looks like.
Okay.
And so that guides us when we're talking about drilling wells, and because subsurface is really kind of no different from the surface of the other. There's lots of undulation. It's not just this flat linear layer of rock.
It's not actually like a layer cake where it's all even all the time.
It's not even all the time. You have faulting and karsting, and so when we hand that information off to our technical team as an operating company, the geologists, the engineers, the drilling engineers are evaluating how to maintain when they drill down and then they drill horizontally. We want to make sure that horizontal wellbore stays in the target zone as long as possible. Right. And so if the rock has movement, right, undulation in it, you got to make sure that you're steering the end of that wellbore to stay in zone as long as possible.
And the technology got good enough that they could really in real time kind of steer it remotely.
Yeah,
which is wild.
Just like any other industry with technological advancement, right? It's in particularly say in the last 20 years, right? We've been able to see where you can put GPS on the bottom hole location. You can steer that well. You can make turns. You now, when this all started, you were really trying to drill lateral, kind of in this like 3,000 feet of horizontal leg, so parallel to the surface. And now we're up to when I say we, I mean the industry seeing more, 15, 18, sometimes even 20,000 feet of lateral length that's drilled out.
You're drilling sideways for like a mile or
well, now
more?
they're pushing the envelope pretty far. I mean, you really standard is about a mile and a half, 2 miles.
Wow.
Depending on formation, depending on other areas, like here in the Northeast is the Marcellus. That's a massive gas field, humongous resource for our country. It drills differently from maybe wells drilled in Utah or wells drilled in Colorado, where I'm from. They have different depths and different temperatures, which require different tools, all of which have come along at a breakneck pace in the last 20 years in our industry. It's been really, really fun to see and be a part of in the last 20 years.
So the process from trying to figure out the lay of the land, you were describing Larry and his team saying, well, if correct me where I'm wrong, if there's like leasehold to the south and leasehold to the north, maybe they were going to pick up leases in the middle, kind of surmising that, hey, it's got to be good there too. And one thing led to another because you have to lease the property. And then what happens? Can you kind of walk us through that?
Sure. Yeah.
Process?
When you put together an oil and gas prospect, landmen will go out to the landowner themselves. And you say, well, why are they doing that? In the United States, landowners own from the core of the earth all the way up to the surface that you walk on. And it's in real property law in our country, it's called the bundle of sticks. And so if you can imagine as ownership comes to you in your deed when you buy a piece of property, you're owning a grasp of a bundle of sticks, and each stick represents a different ownership. Surface rights, water rights, the right to executive rights, which means basically to steward the property. You can assign those to different people. And one of those sticks is the mineral rights, which includes oil and gas.
Okay.
And so when I was with Dale operating, our focus was in Tarrant County because other companies had already built their positions and started drilling wells.
Okay.
And one of the larger leases that Larry put together was with the city of Fort Worth around Gateway Park, which is just east of downtown Fort Worth.
So you're negotiating a lease with the actual city?
With the city of Fort Worth,
Okay.
which was also really, really interesting. Larry was gracious enough to really kind of put me in his hip pocket. I mean, I was 25, 26 years old. I'd never been in the oil and gas business. I didn't have a oil and gas technical degree, but he had a lot of patience with me, and I was really hungry. And I recognized pretty early that this was an industry with kind of a hockey stick vision on it, right? Of golly, like there's just so much, like all the meetings we kept going to, the upside potential continued to get bigger and bigger and bigger from an industry perspective. You'd hear more about more wells coming on and the volumes of gas that were coming on. At this time, you have to realize too, in 2004 and 5, in around that area, the United States was a natural gas importer. Like we didn't have enough domestic gas at that time. And as the story unfolds, the shale revolution unfolds, we're now, as you well know, we're a net exporter. In fact, we're becoming a very large exporter with LNG facilities, which we can talk more about. And it's super fascinating how we went from an net importer to now a net exporter. And now we are on the stage. We've built the stage. We're on the stage as the world's largest natural gas exporter, and servicing and providing abundant clean fuel to other parts of the world, which is an amazing feat that we've put together.
And when you say that the Barnett in like 2003, 2004, that is so early to me because I forget that the ability to drill that deep and go sideways even existed back then. When I was introduced to it or fell into it literally in 2008, it was the Marcellus Shale in Pennsylvania. And I was kind of getting into my first couple years of the industry. And one night somebody said, hey, they just discovered the Utica Shale over in Ohio, and it's this big, or that's what they think it's this big. And
that's it.
It blew my mind.
The story kept getting bigger and bigger.
What? There's more?
Yeah.
There's gonna be more leasing,
so
more
it was,
opportunity.
It was an unbelievable, really kind of 15 year of land grab, right? So it started in the Barnett, and the industry got smart to it, and the technical groups, the geologists and the petroleum engineers and the reservoir engineers looked at it, and they looked at the features of the geology. And industry it was very quick. Capital, it's a capital intense business. And so very quickly, the next play developed, and that was the Haynesville Shale, which is in Northwest Louisiana and parts of East Texas. It's deeper, it's hotter, but it's under far greater pressure than what was the Barnett. And so industry flooded that area very quickly with capital. I mean, and so Chesapeake and Aubrey McClendon, I was lucky enough to spend some time with Aubrey early in my career and work with him in a joint venture that I ran with him in Shreveport. Moved to Shreveport. My wife and I had our first 2 kids in Shreveport, and got to really kind of launch that shale play at ground zero. And that was at the end of 6. Well, no, that's not right. Right at the end of 2007.
Okay.
So that play takes off, and industry does what it does. The Fayetteville Shale, which is in Arkansas, that one came next, and it's not nearly as prolific, but it's still a big gas field. And it's kind of funny how it goes across the maps, kind of moving from Fort Worth and it goes east, and then comes the big one in Marcellus, right? So that one's been a huge supplier of natural gas for our country, and continues to be and will be for decades to come. And then you're exactly right. Utica took off, which is in Ohio. And right about that time, you had really kind of a trifecta happen. And you had the Bakken, which is in North Dakota and parts of Montana. And that's very oily. So these other plays are very gassy. But the Bakken Shale took off. At the same time, you had what's called the Scoop Stack, which is a play in Oklahoma. And then you have this technology come back to the Permian Basin, which that's the 800-pound gorilla in the room.
West Texas.
It's the,
oil.
It's the biggest oil field that we have in our country.
Yeah.
Has been, will always be.
Yeah. And you can feel the energy out there. I was mentioning before we started rolling that I spent 6 weeks, maybe 8 weeks living in Midland. I was in an Airbnb, but we were trying to get an office set up and some staffing. And I mean, can you describe what Midland or some of these other places are like?
I mean, kind of. It's the history of oil field discovery is always been boom and bust, right? To go all the way back to the Drake #1 in Titusville, Pennsylvania. I mean, when there's a discovery of a field, big or small, it floods with. It's almost like the gold rush in San Francisco. So you'd have lots of capital, entrepreneurs, you'd have service providers, and very similarly,
food trucks?
See that. Yeah, food trucks be everywhere.
Maybe that's a dream scenario.
Sure.
The food trucks show up.
Yeah.
Maybe not. There's some,
Lots of guys made lots of money just doing kind of second order operations, right? Food trucks was a massive one. Trailers and camps, water haulers, you name it, right? So, and that's still very much a big part of our industry is oilfield service companies.
I mean, there's man camps out
in West Texas,
in West Texas, where it's just the basic necessities.
And just as jubilant as it can be on the upside, it's, as you can imagine, on the other side. If you have an oil crash, which we've gone through plenty of times, and then those camps and that workforce dissipates, right? People go to where the opportunity is. They go to where the work is. But so kind of coming back to that trifecta, you had Bakken, you had Scoop Stack, and Permian all really crank up at the same time. Now, the interesting thing about the story is that it really kind of all started there in the Barnett Shale with horizontal drilling and hydraulic fracking. And that was the key ingredients of the recipe that industry took and applied to these different basins. And continues to do so to this day.
Got it.
Yeah.
The version of a landman that I've heard of is a true blue landman should be able to go to the courthouse in the morning, pull the literal books off the shelf and figure out who owns the property, kind of run the title, but run it back more so than you would just when you're buying a house. And then it's so check the books. In the afternoon, you go to your hotel room, right? Because you've traveled, right, to wherever the action is, and you prepare the lease document. And then you go out in the evening to the landowner and you present the lease to them and say, we'd really like you to enter into this agreement with us.
That's a lot of it. Yeah, I mean, that's a lot of it. And you're putting together what we call drilling units.
Okay.
And so a drilling unit is really kind of it is a geographical boundary. In different states, they're regulated by different sizes. And so a typical drilling unit would be anywhere from 640 acres to 1,200 acres, right? So almost 2 sections of land. You say, well, why is that just arbitrary? There's a lot of science that goes into that. They look at drainage from all the horizontal wells. How many horizontal wells can they put in one unit? And then you stack that up with the regulatory environment that the states mandate, how many wells you can put next to one another, and you're not putting them 5 feet apart. That would be uneconomic, right? So there's a level of science that the engineers drive and say, hey, look, we'd love to drill 8 wells here, Matthew, and we're going to space these wells out by 600 feet between one another. Well, okay, so great. We're going to draw a rectangle around that spacing unit. And then we need to acquire leases to put that unit together. And so, we'll go to the courthouse and begin our title research. Mineral ownership is not part, and I get this question often. It's like, well, I've got a title policy. I bought my house, I bought my ranch, or I have 40 acres or 25 acres, and I have the title policy. That'll just tell us how many, what percentage of the mineral estate are not covered in title policy. So the landmen go out and run a new chain of title to understand who owns what, because just because you're talking to John Doe that has 40 acres or 50 acres doesn't mean that he's the owner of the minerals, of the oil and gas,
Okay.
to that property. And so there's a level of legal and research and title and deed interpretation. You start running back in the chain of title. And as oil fields are discovered, you can see that previous owners begin to make their own reservation to save that mineral estate for future generation. And so it's very common that there might be a John Doe that owns the surface, and he might well ranch on it or farm it, or it might just be a recreational piece of property. But then we do the research and we learn that there's a dozen mineral owners, all of which are unrelated. You're talking maybe 3 or 4 generations deep, most of which have never even gone out on the property. But and sometimes we'll get on the phone with them and they had no idea that they owned these minerals. Mm-hmm. And so then it's who are you? Why are you calling me? Kind of thing. And so we walk them through that process of why we're calling, how we found what they own. A lot of it's give them copies of the deeds and that sort of thing. Mm-hmm. Walk them through it, and then an explanation of what we're trying to accomplish and what are we building, what are we trying to develop, that sort of thing.
And there's nuance to it. When you brought up executive rights earlier, it reminded me of the first time I went out and signed an option or a purchase sale agreement to buy some minerals from a landowner. And the guys I was working with, they ran the title and they said, "Hey, Tim, they don't own the oil and gas rights." And I said, "Well, I saw the lease and the payment when they got paid to enter into the lease." They said, "Oh, no, that's correct. They have the executive rights, the right to sign a lease and get paid to enter into the lease, but they don't own the royalty rights." I was like, "What? There's a difference?"
You can break those up, yeah.
Like,
yeah, and in some
I know I'm not
instances,
the smartest guy, but
feels,
how many different ways can this go?
Yeah, it feels really cumbersome, and it is in a lot of senses, but at the same time, it's also a luxury of real kind of autonomy and freedom that we have in this country as property owners, mm-hmm. just pure and simple. That is afforded to each landowner to be able to do that, right? Mm-hmm. So yeah, that's a huge one. Let's make sure that who's signing the document actually has the authority to sign a document. That's a big one.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Join us May 27th through the 29th for Bitcoin 2025 in Las Vegas. Use code KOTZ for 10% off tickets. So can you walk us through from your time at Dale to the next step, and then from the next step, I think, to Maevlo?
Sure. Yeah. So, golly, that was so many years ago.
Many moons.
Yeah. So we built a position in the Barnett Shell at Larry Dale's office, and he and his partners sold that entity and that those properties and wells that we drilled to Chesapeake Energy, which is out of Oklahoma City, co-founded and run by a guy named Aubrey McClendon, which he was really the patriarch of shale expansion at the time. So this is more 2007 to really kind of 2014. And through that process, I was involved with a joint venture with Chesapeake to build their Haynesville shale operation from a land perspective. And that talk about just an incredible run from 2008. I mean, gas was $7-8 an M. These wells were just screaming. They were drilling wells. We were at the very tip of the spear. I was 28, 29. My wife and I had just had our first kid, and so it was just an amazing ride. Then, of course, GFC, and gas was not $6-7 an MCF any longer. It crashed, just like everything else. And so I took a step back for a moment and realized I wanted to remain in the industry. I was long on regulatory, land, legal, and a bit of finance, and I was really short on the technical chops. So, and what I mean by that is really just spending time at a company that's got really sharp engineering, right? How do they look and make their decisions about putting together a multi-year drilling program? A headhunter found me, and we went and joined an operating company in Denver. My wife and I had 2 kids at the time. We thought we would be there for, maybe 2 years in Denver. And they were kind of the inverse of kind of what I'd experienced. They were long technical and short on land administration, and a little bit of finance. And so it was a great fit. I could come and ask a lot of really interesting questions about technical and how do we think about decline curve analysis? How do the engineers steer a well, like we talked about, remotely? How do they do that? That's the company that shot the 3D seismics. That was really interesting. And so that's what moved us to Denver. That was in 2012. And from 2012 to, and the other really interesting piece I almost missed was at Vantage Energy, which was run by Roger Beemans and Tom Tyree. So really big, almost titans of oil and gas in the Denver Rockies area at that time. And was, again, really fortunate to have a channel that I could speak directly with them, be in meetings. They challenged me. And so through the course of my career, it's been with oil and gas investors, oil and gas entrepreneurs, and oil and gas builders. But at Vantage, it was a private equity portfolio company. So also got to see how private equity, Wall Street capital, big dollars, or how they think about a portfolio company. And we were just one of many portfolio companies inside of a fund. Mm-hmm. And so that was super fascinating to see and witness, like how they think about an investment decision, a thumbs up or a thumbs down on whether to drill that next incremental well, how they think about risk, how they manage risk, how they structure their funds. And so really just to be a fly on the wall and be a part of some of those really critical meetings at that time, which I use to this day, right, as we stood up Maevlo. So at Vantage, my wife and I had our third kiddo, and at that time it was I've always just had this inkling of hanging my own shingle, Tim. Like it's all of the time I spent at these different operating companies and in shops with different energy investors has been huge, and they've helped me so much. But as an entrepreneur, I mean, you know this. It's an itch that you can never scratch unless you just go do it. And so I was super nervous and scared, and thank God my wife had the patience with me, right? And made that jump in 2018, and just have never looked back. And believe me, like there's moments when you make that jump and you go, golly, like, is this the right thing or is this the wrong thing? I remember talking to Bruce Hill, which Bruce is another fantastic mentor. He's on our board at Maevlo. And he's kind of the king of one-liners. And he said, stop spending time looking in the rearview mirror. Right? There's a reason the rearview mirror is smaller than the windshield. Right? So start going forward and start taking steps and building your company. And so that's the launch of Maevlo. As we, so now I've got a small bit of experience in the oil fields. And one of the things that we didn't really talk about is the capital intensity that's involved in the shale revolution.
How many dollars or a range of dollars does it take to just drill a well? Not even maybe including land costs or however you want to.
Sure, yeah, like it's a lot. So
like millions.
Yeah, well, it can be arguably tens of millions, right? So the days of 1970s and 1980s, kind of the J.R. Ewing of, hey, look, we're going to go drill these 10 wells and it's going to cost $500,000 or $50,000 wells, and some will hit and some won't. That's out the window. And it's been out the window for a long time. These horizontal shale wells are anywhere from $12 to $15 to $18 million each, right? So you've got to have $100 million to go dig several holes in the ground. Right? And so if you're 100% successful, which again, we're in the oil and gas business. Okay. So I think we all understand what I'm saying. If you're 100% successful, then you also have commodity risk exposure. So you could be 100% successful, drill all of your wells with this $100 million bag of money that you've got. And then someone shoots a missile the wrong direction on some part of the other, on the other side of the planet, and commodity prices go the wrong direction. And guess what? You lose. So at the beginning of that equation, I didn't have $100 million to go be an oil man and go drill my own wells. But what I did have was a great experience of seeing how these other men have built these oil companies. And what it did is, let's just go and acquire the minerals themselves. Again, I'm not a technical person. I'm not a drilling engineer, right? I'm not a geologist. I don't find oil. What we do is talk to people and get on the same wavelength with them and understand where are they going in life, what are they doing, how, and we try and find an opportunity that's amenable for them and amenable for us. And we buy the mineral rights in these certain shale basins that are around the country. And what that allows us to do is be a participant, okay, in the wells that other operators are drilling. And so as a mineral owner, when you own those mineral rights and an operating company comes in to drill those wells, you're going to receive a royalty payment from the production. You get a percentage of the production if and when the well's brought online.
Okay.
And that was something that was always part of my career, from buying leases and being a landman. But it was just take a step into building my own company as an entrepreneur. And we did that at the end of 2018 and really started to see an amount of deal flow in 2019 that exceeded the limits of my balance sheet. And so at that point I said, hey, it's time to go raise some capital. And so that's where we, went back and I leaned on how these other energy entrepreneurs had built their companies, and then also looked at some of the private equity sheets in their playbook. And I knew what I liked, I knew what I didn't like. And I like to say we pulled play sheets from a couple of different playbooks and put them together and formed what is Maevlo. And that's where we're at now. And it's been an awesome ride. We've done 3 successful mineral and royalty acquisition funds, and we're in the process of starting our 4th fund, and we're starting our capital raise. And then we have a what's called a non-op working interest fund, which is a little bit different, where rather than owning the minerals and the land itself, you own a small percentage in the well, kind of shoulder to shoulder with the operator. So it's a different layer of the onion.
Okay. I
think is maybe the best way to say that. There's a little more risk in one versus the other. But one really interesting facet about our makeup and what we do is our ethos at Maevlo is family life investing. And I spent a lot of time with some really good friends and some other guys that helped me, Ben Rogers at Pivotal, to help shape what that is. Because you always hear it and you read about it as you start a company, is understand your why, right? So it's always, for me, it was always this, it's like this abstract thought of understanding why you're doing this, or have a mission statement. And it took me a long time and conversations with family and with consultants and help. But we landed on our ethos, and I'm really proud of it. It's family life investing, because as an entrepreneur, the more I thought about it, Tim, whether you're drilling an oil and gas well, or you're the host of a podcast, or you're a small business owner, in some facet in there, you're doing that for your family, right? We all want to provide, and we want to leave something for our kiddos down the road, our family members, right? Or it might be that it's just for life, right? And what I mean by that is building something in a business that allows you to take a trip with your family, or maybe just as simple as your kids playing baseball, or doing life and having autonomy and the freedom to say, hey, I'm going to work really, really hard these next 6 months so that I can have this amount of time off at some point in the future. And then that last piece is investing, and Maevlo is that vehicle for me and my family, and how we think about how we're going to create and build for our community through investments that we make, as well as for our future generations. And so that's our ethos. That's the lens that we look through on a daily. And it resonates really well with our partners. I found that there's birds of a feather, right? And when you really kind of get down to brass tacks of what you're trying to accomplish, it's like, yeah, we're in the oil and gas business, we're in the energy business, and making investments in oil and gas is great, but landing on that why has been super important for us since we started.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today.
Europe's richest Bitcoin heritage site, Prague. BTC Prague, the biggest Bitcoin conference on the continent.
Join us June 19th through the 21st for Bitcoin Prague 2025. Use code KOTSMAN when you buy your ticket at btcprague.com. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. So you mentioned that you have a few oil and gas mineral funds that have been launched. They're active. You're about to launch the next one. We're sitting here in New York on some show called the Bitcoin Treasuries podcast. How did you, what was your journey to Bitcoin, and
Sure.
how is this next fund maybe a little bit different?
No, it's so great question. A little bit about our three funds to date. So we've launched and closed three funds since 2019. We're in about 1,200 wells across 5 different states. So great geographic diversification, operator diversification. About 75% of that it's in natural gas. The other quarter of that is in oil properties.
Okay.
Most of that is drilled up, which means the wells are already in the ground and they're producing.
Okay.
There's still some opportunity for what we call infill drilling, which is more wells to be drilled at a date and time by another operating company. So those vehicles were a success. And so we've recycled our cash flow from those endeavors, kind of one on the next. And we've doubled our LP pool each subsequent fund that we've done. So we're starting this Fund 4, Maevlo Production Fund 4. And so how does this oil and gas guy get involved with Bitcoin? And I'm going to kind of push back on you a little bit as well, because I remember it's literally 6 months to the day. I was here in New York. I was at a oil and gas investor conference with Gehring and Rosenquag here in New York, which those guys are phenomenal, deep dive experts in the commodities and natural resources space.
Okay.
And we went and had dinner, and what I can tell you is I've always been a pretty curious guy and want to try and understand as much as I can. And I can tell you that when we sat down and had dinner, your hair was standing straight up. And the only thing that came out of your mouth was Bitcoin and MicroStrategy and Bitcoin and MicroStrategy. And I had no idea why you were so electrified, because our paths had been pretty parallel from an oil and gas perspective for a number of years. And so it sparked a level of curiosity in me. And the first layer that really made me go, okay, Tim's onto something, was on the flight back. This was last fall. I looked on the flight back. I pulled up ChatGPT. I said, "What's the total market cap of oil and gas?" Because I understand oil and gas enough, right? Been in it for 20 years. And I said, let's understand what, from private company to public company, what does the market cap look like? And of course, that has it has variability with the price of oil and the price of natural gas. But it's when you look at public companies, private wealth private wealth funds, private companies, it really lands something between $7 and $9 trillion. Okay, so let's call that 8. So the oil and gas industry is something in and around $8 trillion of market cap
globally.
7
to 9 trillion. Okay.
Right. So let's call it 8, right?
Sure.
So on that same flight, I go, okay, so what is Bitcoin's market cap? And how does that stack up? And when you start to dig and you start to do the research, as you call it, do the work, you realize at that time, Bitcoin's market cap was about 1.9 trillion. So call it 2, right? So that was super, super interesting to me because just from a market capital standpoint, you've got something that the energy space has been around for the better part of 150 years, right? It's a global product. It's not going anywhere. We're going to need energy as we continue forward. But it's taken 150 years to build this market cap of, plus minus $8 trillion. And then you step back and you look at Bitcoin and go, my gosh, it's done 25% of that market cap in 15 years, right? So that began the process of like, why in the world is no one talking about this? And how did that happen? Like, why have we been asleep at the wheel? I'll speak for myself for so long and see what the impact of that is. And that led me down a journey, led me down a path to just absorb. I think you said it, and you might have stole it from someone else. I don't know. But it was do the work. It was like, you need to do 100 hours. You need to do 100 hours and understand what's going on. So naturally, I start listening to your podcast. I listen to MSTR True North, and you guys come on Wednesdays, and that's right about the time I take my daughter to and from swim practice. And so it's always believe me, a fun conversation that she's like, we got to listen to Bitcoin again. I'm like, yes, you have to listen to Bitcoin again. We're going to and from practice.
And you're in Denver, so it's a little bit earlier than Eastern time out there.
Right.
Okay.
Right. And that was really where it took off for me was in the holiday season, right? So I had some time. We kind of closed the office down at the end of the year and read the Bitcoin Standard. Started to start with why. It reminded me so much of the shale revolution and those early years of spending time with Larry Dell, Maynard Shaw, and Roger Beemans, and they were all patient enough. I go, well, why is that? Well, what does this mean? And why is that? What is a JOA? And what is an oil and gas lease? And it was a lot of like, we just got to figure this out. Especially with Larry, it was, well, I don't really know, but we need to, Matthew, you need to come with me. We're gonna do this together and figure out how to write the drilling ordinance for the city of Fort Worth.
Wow.
Well, okay. I mean, I've never written a drilling ordinance in my life, but we'll figure it out.
Yeah.
Right. That's where it started, was that market cap measure of something that took 150 years is 8 trillion. And then something that is 25% of that, and it did it in 1/10 of the time. And so that was very shocking. And so that led a lot of, well, why is that? Why is that? And then really where conviction happened, as I think about it, was in the big print, Lawrence Lepard's book. And
which just came out very recently.
Yeah, I think it was maybe February or so. It was at the time we were in the middle of closing out and selling our first fund. I was really gauging appetite of the market and appetite within our investor community for a fourth fund. And then I'd spend, nights and weekends trying to understand this Bitcoin thing. And so the book helped tremendously. I bought it, did the audio book, listened to it, driving to and from different spots. I ended up buying 15 copies of it and handing them out to friends and handing them out to family members. And it was such it's a great reference tool because you can move through different parts of the book. You know, they don't subsequently build one chapter to the next. First half is about economic history, which I loved. And the other part, the second half, obviously about the technology, the nodes, and the network, and how it works. And so you can move back and forth in it. And so that really brought a level of conviction. And for me, kind of that in that time frame as well was the real sound money is really what this is all about. Because I think I've heard Michael Saylor say it before. It doesn't matter how successful or big or scalable or profitable your business is if the currency is destroyed. And I thought that got me thinking, well, golly, well, what if he's half right? You know, I can literally remember going back and research and saying, has currency been devalued? And it's like, when you put that in and you start to search down that rabbit hole and understand that, yes, our currency has been devalued, not just a one-off, but year after year after year after year after year, our currency continues to devalue. And then you go pick up the kids and we load up in the truck and we drive through Chick-fil-A and it's more than $100. You know, you're going, this is crazy.
How many kids do you have?
That's part of the equation, right? I've got a 16-year-old boy that's hungry all the time. But still, you recognize pretty quickly that yes, inflation's still there and rears its ugly head. And you've got this devaluation thing that's still ongoing. And look, I'm no economist. I don't try to be. What I can tell you is that drilling oil and gas wells is really hard. And a lot of people will say it's just crazy risky, but I've been in the business for 20 plus years and it's really, really hard. And people will say, well, yeah, you could say the same thing about any business. And I think that's true as well. Mm-hmm. It's really hard. And so it's so disheartening to work so hard and then have your dollars cut, frankly, in half in the last 5 to 6 years. And so that kind of led me to really this kind of mindset of where is the most sound money? And let's really understand sound money. And for me, that's in the number 3 spot is oil and gas, right? It's a very scarce asset. A lot of people will say that's an inflation hedge and has been. Real estate is a very common thought there, but for me, it's oil and gas. And then in the 2 spot, just above that, is gold, right? It's more scarce than oil and gas, and has arguably a higher value. You've roughly got a $20 trillion market cap in gold. And then through the workings and through the study, you see that there's really this apex sound money thing of Bitcoin. And so what we've done is I started to make some investments in Bitcoin to understand it more, to understand how it works. And as soon as you make that step, you kind of go, okay, well, 1 to 2% of my position or my portfolio, right? It's kind of this, well, I'll hedge against inflation. And my experience has been that turns very quickly into, you know, it's a 1 to 2% allocation will protect me against inflation. And then you catch yourself saying, well, it's a store of value, right? It's a good savings. Mm-hmm. And the more exposure you have to it, even in the volatility of Bitcoin, you understand that that's a feature of the product. And it really becomes this aha moment of it's a solution, right? So we have this, in my mind's eye, you have this kind of chart where you have this asset that will continue to go up. Now that's a measure of time, right? How high and for how long. Mm-hmm. But on the other side, you have this other line of dollar devaluation. And so now you have this massive spread between the two. So I'm in the midst of raising another fund. What does that look like? Finding good energy, oil and gas opportunities. We can do that. We've done that. We will continue to do that. Mm-hmm. But it's really kind of this thing where, what does it matter if we work just as hard or harder and we scale and we execute flawlessly and we get to the end of the next fund life and the dollar has only 60 or 70% of its value, its purchasing power from the time that we started. It's like, golly, like that's such a deflating proposition for anyone, right? And so that's really kind of how my journey through Bitcoins was started, with here in New York and having dinner and just being curious enough to open my mind enough to explore what is going on. And I think I was telling someone, it's like, in college, no one wants to go study economic theory and history. Maybe I shouldn't say no one, but when you begin to steward other people's capital and you begin to build a business, or frankly, just begin your career and have earnings and know that you're trading time and risk to earn dollars and have those dollars devalued, man, that's a disheartening thing. But there's also a solution to it. And the solution is this sound money that Larry has in his book. It's so well put out. And the solution is sound money. And you start to recognize when societies were on sound money, how frankly unnormal that has been in the last, call it 50 years here in this country, or frankly in the world. But when you look at times and periods and eras of when they were on sound money, it's a good thing. So that's my Bitcoin story up until today.
From Larry Dale to Larry Lepard. It might sound like mineral and royalty funds and Bitcoin, like, are they totally different? Are there similarities that you've seen between the two or not? And is there anything that you're about to do with your business that kind of brings those together?
Sure. Yeah. It's I view them as very parallel, right? You have this you have a scarce asset. You have it's there's mining related to both of them. You have to expend a tremendous amount of power and energy to extract that commodity out of the network or out of the ground. So there's parallels there. So as a mineral buyer, as an oil and gas guy, that was always super fascinating to me in as going through this Bitcoin journey. And then what we're doing inside of Fund 4, I'll talk more about the specifics of Fund 4, but another part that weighs really heavily on me is, so I'm a landman by training, but inside of a fund, there's a deep burden of stewarding other people's capital, right? It's something that keeps me up almost every night. It's a privilege, right? It's a deep privilege that people trust you or trust Maevlo with their capital, regardless of how big or small their investment is. We're all partners in this deal. My family is deeply invested in each of our funds, and so I'm shoulder to shoulder with all of our investors. But that's a huge part of this deal, and what I mean by that is the attention that we have for our investors to not just go out and willy-nilly buy some deals, but make sure that what we're buying are the best deals for our partners. We're an oil and gas mineral vehicle first, and the Bitcoin Treasury operation that we're going to put in our fourth fund is an added benefit on the balance sheet.
Okay.
And so it's been a really interesting story, or I should probably say chapter, right? It's the next chapter of Maevlo, and it's we've only just started this Bitcoin Treasury operation inside of our fourth fund. I've talked to a handful of our investors in the last 2 weeks, and the feedback I get is what I think is super interesting, right? I've got all walks of life and ages and different areas of life in our investor pool, some of which the fiat world has worked very well for them in years past. And when I share this idea around sound money and why we're pursuing an option of Bitcoin Treasury, they very quickly resonate with dollar devaluation and inflation.
Okay.
Right?
Yep.
They're not as tech savvy, but they go, yes, like there's something going on here.
Like they can feel it.
Oh, brother, you can feel it.
Yeah.
Okay. And then I've got younger investors that say are on the backside of the GFC, and in their professional career, they've gone through a handful of recessions. The dollars never really worked for them. They are very big Bitcoin proponents.
Okay.
Right? But they're still trying to understand investing and growing their career, growing their earnings. But they don't quite, they're like, well, yes, I'm an advocate of Bitcoin, but help me understand what treasury management looks like from a fund level perspective. So it's been really, really fascinating to navigate that with both sets of kind of cohorts, right, so far. But yeah, we're open to the conversation, and we're constantly answering questions about how Fund 4 is going to come together. And yeah, so let's talk about the structure of Fund 4.
Absolutely,
I skipped over that. So Fund 4 will be in the minerals and royalty space in the oil and gas world. Minerals are what I call the highest level of option value. And what I mean by that is, as a mineral owner, you have a plethora of different options available to you for owning that asset. You can lease those minerals to someone else to drill a well. You can sell all or a fractional piece of those minerals to someone like Maevlo, right? You could sell half and keep half. You can pass those minerals down in your will, right? You can, of course, you can do nothing, which is also an option. It is like, I just want to hold. I don't want to lease them. I don't want to sell them. I don't want to, pass them down in my will. So there's a tremendous amount of option value, and then kind of around that option value are different variables of negotiation with your lease and your mineral sale, et cetera. And so inside of Fund 4, I wanted to bring that option value to my partners. And the way that we're doing that is we're going to have a Class A and a Class B inside of Fund 4, so that our investors have the option to say, hey, in Class A, there is no Bitcoin strategy at all. So they just say, hey, look, I want to stay in the oil and gas business. I want to invest in these opportunities and wells and production. And then we're going to make distributions to them, just like we have in our previous funds, in United States dollars, right? But then we also offer them a Class B selection.
Can we call it the Bitcoin class?
Totally. Yeah, I didn't even think about that, but duh.
Class B.
Class B.
Sign me up for Class
Bitcoin,
B.
Bitcoin class.
Yeah.
And so in that department, or that class of investors, again, collectively we'll make the acquisitions and own the oil and gas properties at the fund level. And then the fund, through its cash flow on a pro rata basis, depending on the share of equity between A and B, the B will strategically buy monthly and probably even weekly Bitcoin and hold it on its balance sheet. You go, okay, so how are you going about that? I've been in long talks with the guys over at OnRamp that have helped me a ton to understand what is custody and the risk of custody, and what is cold storage, and what is multi-institution custody. I had no idea what that was. But we've already partnered with OnRamp. They are going to be our multi-institution custody person, or entity rather, inside of our fund. And then I've also partnered with Acropolis, and Acropolis comes beside guys and funds and business owners such as myself, and says, hey, we can help you and strengthen you and be your quasi Bitcoin Treasury officer, which is exactly what I need. And so we have a monthly call where we look and say, okay, is this a good time to buy and use 75% of our net operating income from Class B to buy Bitcoin? Or should we maybe ratchet that down because Bitcoin prices are on a bull run at the moment, right? So we have those ongoing conversations. So it's not just a blind, hey, cash flow comes in and go buy, right? It's a very thoughtful process. The idea there, Tim, is that the cash flow from the oil and gas business is then passively turned over into Bitcoin for our partners. And then we're going to hold the Bitcoin on the balance sheet for a number of years, and distributions back to our partner will come in the shape at their election. Again, another option that they get. Do they want their distribution in cash, or do they want their distribution in Bitcoin, right? Pro rata to their investment. And so I'm super excited about the value proposition it brings. But what I think is really interesting is once we build these mineral and royalty vehicles, we have a oil and gas reserve life. Our average reserve life is about 27 years in our first 3 funds. And so that's a feature of the shale geology that we're in and the wells that we're currently in our first 3 funds. So the way that I look at this is as a Class B investor, you've got exposure to a vehicle that will take us 12 to 18 months to fully deploy into oil and gas opportunities. Those oil and gas opportunities produce revenue for the next arguably 20 plus years, probably 20 to 25 years. And we're going to continue to buy opportunistically Bitcoin on the balance sheet of the fund. And in due time, our investors will be getting an allocation, a distribution rather, of Bitcoin. So you have this drip of Bitcoin coming back to you for hopefully 2 decades plus is really kind of the end product there.
Wow. I feel like we could probably go on for another few hours. So we'll have to do a few more conversations. Where can people find you and your firm online, and just any closing thoughts?
Sure. I appreciate it. So they can find us at Maevlo, MAEVLO.com. And then if you go to maevlo.com/contacts, there's a form to fill out. They can fill that out and we'll be in touch with them.
Awesome.
About Fund 4.
Well, thanks for sitting down, and thanks for your time.
Thanks for having me, Tim. It's been great.